Hello, welcome to Business Incorporated live on Channels Television. Well, it's a brand new trading week and we see trading already moving on right here. But here's what's coming up in the next 55 minutes. The International Monetary Fund and World Bank annual meetings begin today in Washington, D.C. And in Ghana, interest rates on treasury bills climb to their highest level since March 2024. Plus, gold reaches a new high in a record-breaking surge amid global uncertainties. Great to have you join us. I'm Ladi Williams. First off, now we know a lot is going on right now. We see the international market of communications programs as MIPCOM, that's begun in Cannes, south of France, as an annual four-day trade show for the television industry with over 5,000 television stations, content producers, filmmakers attending, and we also have channels, a delegation of Channels Television there for the Nigerian continent, and we're going to be highly represented there, and we're going to be getting information and some reports as they come, but that's what's going on right there in the south of France. That's in Cannes. That's the International Market of Communications programs by MIPCOM. It's begun already, and it's an annual four-day trade show just for the television industry. Meanwhile, the International Monetary Fund, World Bank annual meetings, that begins today in Washington, D.C. This year, the Bretton Woods institutions turned 80, and conversations will be hinged on how they can stay relevant and fair in a world that is different from 8 decades ago, and as more changes in the face of geopolitical tensions that affect economic decisions. We have our correspondent, Amy John Mekoa. She's there. She's going to be covering the event and sending us reports and conversations as they go on right there in Washington, D.C. All right, let's get a check on markets now. We see gold now has hit a fresh high today, extending its blazing rally amid uncertainty surrounding the U.S. election, simmering Middle East tensions and rate cuts by major central banks, while silver scaled a near 12-year peak. We see spot gold 0.6%, over 0.5% up, $2,735. Wasn't that long I was reporting gold at $1,600 per ounce, but we're seeing $3,000 in sight. U.S. gold futures, $2,751, up 0.8%. And we're seeing other metals like spot silver there, 1.2%, $34.05 per ounce. Platinum not shining as much, marginally down 0.02%. Palladium still holding above that $1,000 psychological level, but 1.33% down. So we know how the safe haven acts as a hedge for most investors when there's a lot of uncertainty in the market. Let's get a check on oil prices now. We see it still managed to stay afloat from the early trade, recouping some of last week's more than 7% decline on worries about demand in China. That's the world's top oil importer. So we're still seeing oil holding up from early trade today. We see it's up 0.37% for Brent, $73.33 a barrel. The U.S. grade, WTI, that's $69, still 53 cents, up by 0.45%. So we're still seeing that positive sentiment, even though it was a big drop from last week. That's talking about Brent and WTI. To other stories now, manufacturing companies in Nigeria reduced their debt burden by 1.6 trillion naira between February and June 2024. That's according to data from the Central Bank of Nigeria's statistical bulletin on sectoral distribution of credit by deposit money banks. This drop represents a 14.85% decline in manufacturing loans, and this is coming amidst rising interest rates that have increased borrowing costs across the economy. I know recently the governor of the Central Bank of Nigeria, Mr. Layemi Cardoso, stated that the sharp drop in the value of the naira presents an opportunity for the country to boost its exports to other nations. Reactions are trailing the governor's comment, and one is from Mr. Nnamdi Nwizu, CEO, Commercial Partners Trading. He believes a weak domestic currency is great for exports, but Nigeria is still lagging in production. He made a comment on Business Morning earlier. Take a listen.
If you look at countries like China, they tend to try and devalue their currency to make their exports a lot more attractive. The only challenge that you have with Nigeria is the fact that we don't really export a lot. I mean, beyond crude oil, which is priced in USD, already. So, I mean, that doesn't really help us with regards to the value currency. But I think with what has happened, what we need to try as much as possible is to focus more on the fiscal side to try and encourage, manufacturing companies to set up, encourage production, so that Nigeria now starts to export more. That is when the weaker currency, right, the depreciation of the currency can actually help us. So at this point in time, we are still largely an import-dependent economy. So the thesis around, or the analogy around, being able to encourage export, it will not really be felt at this point in time. I mean, yes, we've seen things like customs revenue increase, but the truth about it is it's not increasing because you've had more exports. It's just increasing because you've depreciated the currency. So government is earning more, but not from production, but just from the move in the currency, which really is not a sustainable one. So we need to try and get Nigeria to start producing so that we can start exporting a lot more.
All right, to our first conversation now, let's look at Nigeria's foreign direct investment. We see there was a decline for the second quarter of 2024, dropped about $29.83 million, marking the lowest level recorded based on available data. That's up to about 2013. Well, joining us now to analyze this, we have Dr. Josh Bamford, partner, head transfer pricing and economic advisory at Anderson, Nigeria. Joining me right here in the studio. It's great to have you.
Thanks for having me.
Yeah, so much happening, at this time. And, we did see the central bank governor, saying that currency devaluation, currency weakness is an opportunity, for exports. And I'm wondering, is it also an opportunity for FDI?
No.
Oh.
So, yeah, first and foremost, it's true that generally when you have a weak currency, it makes your exported products relatively cheap on the international market. And all other factors remain the same. There will be increased demand for your products. And that's the reason why export-oriented countries such as Japan and China tend to have relatively weaker currencies because they are export-oriented in nature. But the same argument can be flipped the other way. You take a country like UK, they are very proud that the pound is strong. In fact, the weakening of the pound can actually cause, the career of a prime minister, which one lost. So you need to look at where you are as a country before you take such a policy prescription. Yes, over time, you might aspire to become export-oriented. But today, we are import-dependent. So you cannot weaken now when you are import-dependent. It will come with unintended significant consequences, and that's what we are facing today. If you look at the relationship between exchange rate and foreign direct investment as an example, if I'm a foreign investor and I want to invest in Nigeria, FDI means that I'm going to invest in long-term projects, like setting up a business, manufacturing plant. So I have to be able to project into the future whether I'm going to be profitable. And secondly, whether when I'm repatriating my dividends, which will be converting from naira to dollars, I'm going to get enough. So if you have a fast weakening currency, how would that make it attractive to me? That is actually risk, right? And that is the reason why, part of the reason why we've seen a sharp decline in terms of FDI from quarter one, which was around 119 million to 29.8 million quarter two. Now, to make it even more clear or explicit, compare it to when Nigeria was doing very well. That was the pre-2016 recession period. If you take 2011 as an example, the total FDI was about 84 billion US dollars. Quarter two this year, we've done 29.8. If we average the same amount for the whole year, that will be around 120 million. You're not even near 1 billion, let alone 8.4 billion. So really, the macroeconomic instability that we are facing, where the three key markets, Market for goods and services, prices are already high. Inflation is over 32%. If you go to the market for funds, interest rates are already high. Monetary policy rate today is around 27.25. Cost of borrowing is just too expensive. You go to the market of forex, which is measured by exchange rate. We've seen a rapid depreciation of the exchange rate. If you compare from the beginning of the year, it's about 40%. You go back to May 2023, a year just before the new administration took over, it's over 200% depreciation. So there's clear macroeconomic instability. Investors cannot predict with certainty how they're going to make their returns. Risk is too high, so FDI goes down.
And, definitely looking at the picture you just painted now with the currency, is it safe to say the Naira, weakening is the root cause of all the high prices most of us are suffering now when it comes to sensitive products like petrol and food prices?
Exactly. So for me, when I look at how the Central Bank of Nigeria is trying to address its number one mandate, which is bringing down inflation, because its number one mandate is to bring price stability. And they have focused almost exclusively on interest rates to combat it. Now, what that assumes is that the major driver for inflation is on the demand side. That means that there's excess liquidity and people are demanding limited goods and services and putting pressure on price of goods and services. But when we look at it, that is part of the story because of the ways and means, fund releases back then. But they've already mopped up a significant portion of those liquidity. We know that monetary policy rate is at an all-time high. We know that cash reserve required ratio is around 50%. That means banks cannot make as much loans and all that. Now, the other part that they've actually been oblivious of or not focused on is the exchange rate element, which also falls under the Central Bank of Nigeria. Now, think of it this way. Under the current administration, two major policies were implemented. One was the removal of fuel subsidy, which means that any cushioning that would, help mitigate the huge fuel prices has been taken away. The second is the liberalization of the foreign exchange market from a fixed exchange rate regime to a floating exchange rate regime. And what we saw was a fast depreciation of the currency under this new regime, the floating exchange rate regime. Now, we import our fuel products. We export crude and import our fuel products. So what is contributing to the high fuel prices at the pumps? It's more of the fact that we have a weakened Naira than even the removal of the fuel subsidy. Because anytime it weakens, the cost of importing that fuel product goes up.
So what if it was fuel subsidy is gone, but currency management stays?
At least the impact wouldn't have been that significant, right? So if we're still in a fixed exchange rate regime, what used to happen is that under the previous administration, you will be converting a Naira to a dollar at 450. A dollar will be equivalent to around 450. So your import cost will not be as much. So that will not be reflective as much in terms of the price at the pump. But this time around, you've taken fuel subsidy, which was absorbing part of the shock, and also floated the exchange rate, which has actually depreciated by almost 200%. So your price would have gone up by almost a similar percentage.
But do you think this government would have been able to defend the 450 Naira to the dollar?
No, not necessarily. So we all knew that it wasn't sustainable. And I'm not an advocate for a fixed exchange rate regime. Everything has its pros and cons. In the short term, it served a particular purpose. The previous, President Buhari was so high on, he was advised by IMF, World Bank, hey, you cannot sustain this, but he felt it was going to hurt, the poor folks. So he said, hey, keep it at that. As long as it's not, we can relieve the average Nigerian, we're going to keep it. But it's not sustainable, and we all agree about that. But you needed to look at the timing of the implementation of the policy. At the time that we're about to implement these policies, inflation rate was already above 22%. So we already had a high inflation rate. So even if we were going to remove, the fuel subsidy, you couldn't do that in addition to floating of the exchange rate. You understand me? If you're going to do that, you have to manage that float. So there are three types of foreign exchange rate regimes. We are looking at the two extremes. One is a fixed exchange rate regime, which the previous administration implemented, which has its own problems. The other extreme is a floating exchange rate regime, where you are saying, I'm allowing the demand and supply forces to determine the price, willing buyer, willing seller. And that leads to this weakening. There's one in the middle called the managed float, where you agree to a reasonable rate within some range, and you manage it and keep it at that point. Because the problem I see with the current situation is this. There's this assumption based on theory that as the price of exchange rate goes up, it will price out some individuals and some businesses who used to demand for those forex, for those who used to take their kids to school in, let's say, UK or the US. All of a sudden, it becomes too expensive. So you might tell your child, hey, come home and go to school in Ikoyi, for example, right? If you used to go for medical checkups, all right, now it becomes too expensive to buy $1. You might cease not to go to UK or US, So it prices out some people. But over time, it's supposed to stabilize. The quantity demanded and the quantity supply is supposed to stabilize, based on the assumption that all other factors remain the same. But factors don't remain the same in real life. We know that there's more speculative demand today that has not been factored in this whole argument. So what we've seen is that, yes, we've seen a high depreciation. Yes, we've seen CBN supply more forex. But still, it keeps depreciating. What is happening? Anytime there's a FAC release, all right, Federal Account Allocation Committee releases funds, we see a correlation between those FAC releases to the states and the demand for forex. And then we see a depreciation, which means that anybody who has excess naira, what are you going to do? You're going to buy dollars because it's depreciating. So it becomes, the naira is depreciating, it's getting weaker. So dollar becomes a store of value. So no matter how the price goes up, people are going to demand more. Not because they have a need for dollar, but because now it becomes a store of value. So there's a need to take out that speculative activity by crashing the dollar to a reasonable period and level and keep it at that point. If I know that I'm going to get dollars at some particular price and it's not going to depreciate over time, I'm not going to rush and go buy dollars.
So there's no need to go, no need. Not to go storing. But let's look at foreign direct investment. Now we know the chief executive officer of J.P. Morgan, Mr. Jamie Dimon, he advised countries including Nigeria that sort out issues when it comes to legal issues, regulatory framework, and all of that. That way, we're going to be piling money, into the country. And I'm wondering, is it that easy for a country like Nigeria?
So there are multiplicity of factors that makes a country attractive for foreign direct investment, right? And if we didn't have this, macroeconomic instability that I just talked about, then issues like, protection of property rights, legal framework, institutions, all these factors become very important. Infrastructural development, because if I'm going to invest in manufacturing and there's gridlock at the ports, it's going to take me months before I move my stuff from the ports to the warehouse. That becomes a problem. I'll compare Nigeria versus another country such as Ghana, right? And say, hey, can I do the manufacturing there and still access Nigeria's large, big economy, which is the competitive advantage of Nigeria. So there are a number of things that need to be done. For example, another example is the energy cost, power, right? If I'm going to go into manufacturing, power cost is very important. Do we have, more consistent power supply, and is it affordable or reasonable so it doesn't eat into my profitability? So there are numerous factors that makes a destination attractive for foreign direct investment. Nigeria has always had that competitive advantage of being the largest economy, large population size. So for consumer markets, definitely you want to come near the consumers, right? And that's the reason Nigeria was always an attractive place. But until we get the economy to be stable, all right, it erodes all the competitive advantages that we have. You understand me? It's just like an economy can only take off if it's pretty stable, right? And now we are bleeding. We are bleeding in all areas. Because even if I come and invest, and the exchange rate was, pretty stable, I'll still think about the cost of borrowing, which is interest rate, because I'll need something for my working capital. I cannot be injecting, because I'll inject equity, but I expect to be able to source funds for my day-to-day running of my business. But if monetary policy rate is already around 27.25, that means the prime lending rate is going to be over 30%. How much am I expecting to make in terms of profitability to be borrowing at such a rate? So all these things have to be stabilized because they are not normal rates. We know that they are up there because of a problem, trying to address inflation. So inflation has to come down, interest rate has to come down, exchange rate has to stabilize. Until then, we have instability, and it's not attractive to foreign direct investors.
And we need to get more attractive.
Exactly, we really need to.
At this point. Well, definitely so much to unpack there. I want to thank you so much, Mr. Josh Bamfo, Partner, Head, Transfer Pricing, Economic Advisory, Anderson, Nigeria. It was great having your perspective. Always
great,
very much. Having your perspective.
I appreciate it.
All right, we'll take a break now. When we come back, we're going to head straight to the markets. That's the moment. Just stay with us.
Thank you.
All right, now let's get a check on most of the markets we track locally and globally. Let's start with Africa now. We see the NGX there marginally up 0.08%. Not a convincing gain there we don't see any domination there by the bulls or the bears, but it's smack in the middle, 98,149 points for the all-share index. In South Africa, 87,060, down about 0.16%. Other markets we track in the Africa region, we see the EGX 30, that's in North Africa, doing pretty well, 1.61%. Then for the Nairobi Stock Exchange, the all-share index, 114 points, 0.52, 1.09%. That was a close for Friday. But let's get a quick check on the FX, fixed income market right here in Nigeria. We have Senator Audu, fixed income trader at Axis Bank, joining me via Zoom. Great to have you on the show.
Thanks for having me, Ladi.
So it's a brand new week, and definitely I know the fixed income market is going to be buzzing this week, but what are you expecting for secondary markets this week?
Okay, the secondary market this week will be largely led by the primary market. So this week we have two fixed income auctions. There's the bond auction today, and there's the NTB auction on Wednesday. For the bond auction today, DMO is offering two bonds, the 2029s and the 2031s. Our expectation with regards to the results from those auctions is that we should see an increase from the last stop rate. To give you some color, for the 2029s at the last auction, we saw that close at 19%, while for the 2031s, we saw that close at 19.99%. On both those bonds, we expect rates to rise because markets, for a variety of reasons. Key among them is that market liquidity is very low at about 837 billion negative today. And the secondary market rates for those bonds are also significantly higher. So we do expect that both those bonds will close at higher levels today.
Right, and do you see investor sentiment towards those bonds? Maybe we'll hear about oversubscriptions today.
We should be, because the amount on offer is quite low. As I said, on both bonds is about an average of 90 billion each, so 180 billion. The amount on offer is not significant, so we do expect that at least the DMO should see subscription to match that amount offered. If the amount were any higher, we might not have seen a subscription to match. That's largely again because the market is illiquid at the moment.
Right, and definitely we know investors love those yields. But looking at what's going to play out, where do you see investors, piling cash into in the fixed income market?
Okay, because the yields are elevated. So to give you some color, again, the 2031s were trading as of last week at about 21.7%. That's quite high for a 7-year bond. We do see some investors going for those long-end bonds. However, with some caution, largely because the exchange rate is still a bit volatile at the moment. We're seeing exchange rate at about 1,600, 1,700 levels. So we're seeing market players be a bit cautious on those bonds. We've seen some interest on the short end as well. That's for the treasury bills. We've seen some interest on the NTBs as well as the OMOs. The CBN came in the week before last at least twice to conduct OMO auctions. The yield on those OMOs being offered is not of 30%, which is quite significant, about 32%. So we've seen some foreign investors take advantage of those high yields on the short end while they gauge the trend, the foreign exchange trend, and see the next steps that the CBN will take.
Right, I guess this is the destination for the carry trade at this point. But thank you so much. Always great having your perspective, Senator Audu. Thank you.
Thank you.
All right, let's get a check on other markets that we track. Now let's see what's happening with the Middle Eastern markets. Last I checked, it was red in the UAE, 4,464 points for the Dubai index, 0.11% down. The Abu Dhabi index is also in the red, 0.20%. Other markets we track in the Middle East, so we see Saudi Arabia and Qatari index. We see that marginally down 0.08%. That's for the Qatari index, 10,607 points. Tadawul, 0.86% positive. That's the only positive mover in markets we track in the Middle East. Let's get a check on what's happening with U.S. markets. Now we see the markets were slightly up this Monday, but we've reversed most of those gains, 0.11% down for the Dow Jones Industrial Average after a winning weekly gain last week. But the S&P futures, that slipped 0.16%. The tech-heavy NASDAQ down about 0.30%. Not much economic data to look out for. That's in the U.S. That's going to be driving sentiment right there in the U.S. market. So it's all about elections right there in the U.S. Who's going to win the election, and is it going to be pro-market or not? We're definitely going to find out. The countdown is on right now for the U.S. Elections, presidential elections. So we're seeing the markets there subdued for pre-market trading. Let's get a check on Asia Pacific now. We see Asia markets were mixed today as traders are assessing China's loan prime rate announcement, with focus also on Japan's general election at the end of this week. Nikkei down 0.07%. The Kospi, that was up 0.43% close. Hang Seng Index 1.57% down, 20,478 points. We see China's central bank, they cut the 1 and 5-year LPRS by about 25 basis points to 3.1 and 3.6%, respectively. Then in India, there we see the Nifty 50, 24,781 points. Shanghai Composite 0.20% up. So that's how most of the markets in Asia are looking. But let's get a check on what's happening in Europe now. Definitely from Europe, then we're going to head to London, get a check on what's happening in London. But for Europe, we see German aviation sector is calling for taxes on air travel to be cut. At this point, the industry wants flying to remain affordable. Well, joining us now for more, Chiponda Chimbelu, right there in Berlin. Great to have you, Chip. So how high are the taxes on the aviation industry so far?
Thanks for having me. Well, Laddie, right now, one of the main issues that the German aviation industry has is the 25% hike in taxes that was imposed earlier this year in May. The tax can add up to 70 euros to ticket prices, depending on the distance that needs to be flown. And that, of course, makes flying more expensive. So that is why we got the call that flying has to remain affordable from the German Aviation Sector Association in a newspaper over the weekend. And it is not the first time that we are hearing that. It's something that Europe's biggest budget airline, Ryanair, has been very vocal about. In fact, 2 weeks ago, the carrier said it was stopping all flights to 3 regional airports in Germany and cutting operations by more than half in Germany. In Hamburg, rather, which is Germany's second biggest city. And flights to the German capital, Berlin, have also been cut. Now, of course, that air transport tax was introduced as a climate protection measure because flying is the most polluting form of travel. It accounts for around 2.5% of global greenhouse emissions.
All right, so what can we expect from the aviation industry in Germany?
Well, the shares of the Lufthansa Group and Air France-KLM are trading lower than they were at the beginning of the year. Lufthansa cut its outlook in July and announced cost-cutting measures. And the Dutch flag carrier KLM also did the same. Earlier this month, it said it would either delay or cancel investments it had been planning, and it would also look into selling non-core operations to lower costs. Now, the delivery delays for new aircraft are also a challenge that the airlines are facing. Boeing's troubles, which include a strike recently, have affected production, and Airbus hasn't been able to step up because it has supply chain issues. Now, that will, of course, hurt airline bottom lines. New aircraft are more fuel efficient and would allow airlines to save money on fuel costs. Geopolitical tensions and conflict are also going to weigh on them. Jet fuel prices make up for around a third of airline expenses. And if oil prices continue to rise amid the ongoing conflict in the Middle East, then their bottom lines will be affected.
All right, let's turn to the markets now. What can we expect from markets today in Europe?
European stocks are mixed today, and that is coming off the back of a wobbly trading session in Asia. Investors are cautious and looking for further details of fiscal support from Chinese policymakers. And of course, markets are also looking ahead to the U.S. presidential elections, which is 2 weeks from now. A Trump presidency would be something that would be expected to hurt European exporters, and a Harris victory, on the other hand, is expected to be a continuation of Biden's trade policies. And here in Germany, DAX heavyweight SAP is set to report its third quarter earnings. Now, the company, which is Europe's biggest software maker, has a 15% weighting on Germany's blue chip index. So it could lift or bring down the DAX today. And of course, Germany's producer price index data is also due today.
All right, so much data to look out for right there in Europe. Thank you so much, Bono Chibelu, for giving us most of those details. But let's take it on to the UK. Now we have Juliana join us from our London studio. Great to have you, Juliana. So we're seeing data out, UK consumer confidence, that improved this month to about 47.3 points. What drove that?
Yeah, good afternoon, Laddie. We have had this data out from the S&P Global UK Consumer Sentiment, which has a kind of forensic look at household spending, and they track also labour market conditions. And they have released data looking at consumer confidence after conducting a survey of, I believe, between 1,500 to 2,000 households. And they have shown that there has been a slight uptick in sentiment. And I think this has got lots to do with last week's data, which was unveiled by the Office for National Statistics, that showed that consumer inflation has dipped to 1.7%, which is quite a huge dip. If you consider that just kind of a couple of months ago, we were in double digits. So the Bank of England, as well as this particular administration and, of course, Jeremy Hunt, have worked really well, really hard in making sure that prices come down. So we can see that that is reflecting in the mood of households in the UK. Of course, it's worth pointing out that 50 is the benchmark. So anything below 50 when it comes to this consumer data still shows that we are in kind of negative territory. But if you compare October's data to September, where I believe it was about 46, it has gone up slightly. I think now lots of economists are looking towards next week, of course, a really big day for the Labour government. Rachel Reeves, the UK Chancellor of the Exchequer, the first female Chancellor of the Exchequer in the UK, she is going to be delivering a much hotly anticipated budget. And we've already heard from the Labour government that they're trying to, fill in this £44 billion black hole that was left by the Conservative government. Mood music suggesting that perhaps there may be some tax rises, which would be almost fatal for the Labour administration, because we know, of course, when they came in, they were all about bringing up the working and the middle classes, not giving them tax rises. So we shall have to wait and see. So I think the post-election high, where consumers and households in the UK were pretty positive that there would be changes, it's dipped slightly, but it's slowly gathering pace. But then let's see what the budget next week has to bring.
Yeah, we'll definitely watch out. But I'm a bit curious here, Juliana. Do you remember what stable prices feel like?
I don't. I'm afraid it's constantly changing. It's changing and fluctuating every month. And when you have 3 children, you know what it's like having children, Laddie. You just spend, particularly when we're coming to half term. Although I've got to say, I don't think the price rises in the UK are comparable to what you guys are witnessing in Nigeria, which is quite shocking, actually. Although I know inflation is coming down before they start writing in or tweeting us. I know inflation is coming down, but it's still pretty tough back there.
But it's not coming down fast enough, in these parts. But I guess another interesting story here, we see Volkswagen Finance, they've been fined about £5.4 million for mistreating UK customers. And that was because they were in some kind of financial difficulty.
Yeah, this is a pretty serious story, actually. I think a lot of viewers in the UK may actually use this case study to vent their own frustrations with anybody they're indebted to. But this is about Volkswagen, not Volkswagen, the German firm, but the financial division within the UK. And I believe they fund or provide loans for various car companies, but they have actually been fined by the city regulator, the Financial Conduct Authority. And in fact, that £5.4 million fine that's been imposed on the Volkswagen financial division is actually the biggest fine that the FCA have put out. And this is because of some pretty shocking cases of maltreatment of customers who were going through some pretty serious economic woes themselves. I read through all of the data before coming through the studio, and there were some customers that were pretty much suicidal, explaining to a customer service operator on the phone just what they were going through. But alas, you know, their cries and their woes were not dealt with, and many individuals had their cars repossessed. And I think it's quite important that the FCA has said that, you know, having a car these days is not, you know, a dream for many people. It's a necessity. Lots of people taking their children to work, or they use those vehicles to fund, you know, their daily survival. So they weren't happy that Volkswagen or individuals within Volkswagen were not treating vulnerable customers with respect. And in fact, on top of that £5.4 million fine, I believe compensation is being sent out to over 100,000 customers, I think to the tune of over £2 million. So this is pretty serious, and I think it does set sentiment. Yes, lots of people can be in financial trouble, but they do need to be treated with dignity, I think, sometimes. Some customer service operators, or should we call them bots now? You don't know if you're speaking to somebody, an AI voice or a human being, but it's that human element that was missed, which is really important that the FCA has pointed it out, and they've given Volkswagen a huge fine.
Right, I guess if consumers need protection, I guess this is the best time with inflation, you know, really high in most countries, even though some countries are getting quite stable, you know, at this point. But it's a brand new week. Data expectations that could, you know, drive the markets in UK. What are you seeing?
It's a brand new week, as you said. I suppose obviously the biggest talk of the week is not happening here in London. It's happening across the pond in Washington, DC, where you've got over 10,000 central bankers, financiers, journalists, economists, normal people like us, at the IMF and the World Bank spring meetings. A really big occasion. Of course, we know IMF. You know, anytime you mention the IMF in Africa, especially Nigeria, we get shivers down our spine. Haven't got the best reputation, but it's a very important institution, which is why, you know, the Nigeria delegation, of course, is there on the ground. I think the biggest talk of the week is definitely going to be the result of the US election. I know for many of us, it's just become, you know, memes on X, formerly known as Twitter, but it is an incredibly important result. So lots of conversations are going to be about that, what a Harris presidency will look like, what a Trump presidency will look like. I think Donald Trump, you know, you can't write him off yet. I think he's had a spectacular weekend, particularly serving chips or fries, as they call it, in McDonald's. He really broke the internet. So it's going to be really important conversations there. We haven't heard much about what Kamala Harris or Donald Trump plans to do on Africa. Very important discussions on that. And of course, for Africa, it's going to be a lot about debt financing. So we're going to listen to what Ajay Banga, the World Bank president, has to say to our Minister of Finance and our central bank governor. So all conversations are on there. Of course, then as well, we've got wars raging in the Middle East. Is there going to be an attack on Iran? We don't know. That's pushed up a barrel of Brent crude today to some significant highs. But let's have a look at the numbers, which are in red in the UK at the moment. The all-share Laddie is down 0.10%, FTSE 100 down to 0.32%, FTSE 250, the domestic market, up slightly by 0.23%. In the currencies market, the British pound is trading down against the US dollar by 0.24%, down 2 against the euro by 0.04%, and up against the Japanese yen by 0.01%, Laddie.
Right, Juliana, all eyes on in Washington for this week. And definitely we also want to hear about what a Trump or Harris presidency has for Africa. We know what they want to do with China, but definitely be waiting to hear what they have for Africa. But thank you so much, Juliana, for giving us most of those details. All right, let's get a check on other stories. Now we see interest rates on Treasury bills have climbed to their highest level since March 2024, and that's in Ghana, highlighting the ongoing difficulties the government is facing in the Treasury market. In last Friday's auction, the government managed to exceed its targets for the second week in a row, but only by a slim 3.97%. There's an improvement from the 1.08% oversubscription seen in tender 1924. Overall, they raised about 4.19 billion Ghana cedis, surpassing their goal of 4 billion Ghana cedis. And the Central Bank of Egypt is auctioning 12 billion Egyptian pounds worth of fixed coupon treasury bonds in coordination with the Ministry of Finance. The 3-year bonds will mature on October the 1st, 2027. Coupon is an annual interest paid on the bond, and investors receive that coupon payment either annually or biannually from issuance until maturity if they hold that specific bond. All right, let's get a check on what's happening in the crypto market now. We see it's mostly green on the screen, just Bitcoin there pulling back after a massive run to about $69,000. We're seeing a pullback 0.21%, but it's green everywhere else on the screen, with Ethereum 2.12% up. Ethereum trying to get back above that $3,000 level. BNB holding up $607. Quite an impressive run there for the Binance Exchange coin. Let's look at the sentiment in the market right there. We know after it was tending towards neutral, but now it's full-on greed in this market, 72 points over 100, showing that traders are really bullish right now. And some investors like to use the fear greed index to know exit and entry points into most of the market. So we're seeing greed there, 72 points. Let's look at the headlines in the crypto market. We see the Kenya Revenue Authority. They're targeting crypto traders there. They've announced a plan to introduce a tax bracket to enhance tax revenue collection in Kenya. That's for crypto traders in Kenya. So we're seeing them there mulling new activities. And we see X Empire, one of the Telegram games. The tap to earn game, X Empire will launch its X token on the open network. That's supposed to be sometime this week, I think about Thursday, but it's revealed of its airdrop allocation. That's the airdrop allocation has drawn complaints from players who say they thought they were eligible for a share of the rewards, but they got messages that they were not eligible. So they're telling Elon Musk to weigh in on the matter, even though it's an Elon Musk inspired project. So it doesn't mean it has anything to do with Elon Musk. But I see Elon Musk getting tagged there on X about what's happening with that. Let's bring in Gilbert Jopata now, financial market analyst. Hello, Gilbert.
Greetings, Mr. Laddie.
Yeah, greetings, Gilbert. But I'm sure some ex-Empire players are not so happy right now, and I see them trying to tag Elon Musk, telling them to weigh in, the matter for them not getting, some of these coins. Well, how are you seeing it?
Yeah, there are always certain policies or terms or rules that always apply when it comes to airdrops, especially the ones that has to do with tapping or mining this way. Most of them used to include using maybe a bot, using bots that is not released by the team for tapping. Some other used to include using multiple accounts. There are ways that they could always track a particular IP. So there are always several rules or policies that always come with these airdrops, but most persons always go against some of this policy, and at the end of the day, you always see complaints like this. So why maybe there are other players in the ecosystem who are complaining. I've also received some feedback from other persons in the ecosystem saying that the X Empire is way better than that of Hamster Combat. So most time, I think persons who always participate in airdrops should always try to adhere to the policy or the rules of the game.
Right, and talking about, adhering to the rules at this time, comparing it with other Telegram games at this point, do you think, because at the end of the players just want to know what is it going to be priced at when it hits the market, do you think this one is going to be encouraging?
Okay, the thing is, I believe that there is a massive wrong orientation or among players, especially in our local community here in Nigeria. But understand what is their challenge. Early when we got into crypto, as 2016, 17, 18, this is what happens when we get involved in airdrops. We are always very happy that a project is allocating a given supply to us for free. And all we used to do is we hold these things in our wallets. And sometimes we forget about them for the next 1 year, 2 years, sometimes 3 years. And what you will hear is that particular asset you receive for free is trending. And people should remember that the purpose of an airdrop is purely marketing. So what happens is a project will decide, okay, instead of us giving $1 million or $5 million or $10 million to marketers, let's rather use it as an incentive to reward persons who will get to hear about this project. And so the more persons who get involved, let's imagine that, okay, a project decide, okay, we are keeping 100 million for these airdrops. Instead of us paying this to KOLs, marketers, let's pay it to the end users. The more persons who get involved in that particular airdrop, it becomes too saturated. And at the end of the day, your allocation may be small. So I think this is the wrong idea or mentality that is really going mainstream among persons who get involved in cryptocurrency airdrops. But then I think the very anticipated build up is the listing that will happen on the 24th, which is, will it be encouraging? But then I think it's left for the market to price it. But I think that this will be more encouraging than maybe the last couple of airdrops core airdroppers have always complained about. But they should always understand that it is not how much, it is your allocation. For example, the dogs airdrop, dog listed at a way lesser price than Hamster Comeback. And yet persons were complaining about Hamster Comeback, which meant that the allocation that they received for dogs was way more than the allocation most persons receive for Hamster Comeback. So at the end of the day, when persons who are getting involved in airdrop should just understand that you should not go in with greed. You should understand that this is the project giving you their assets for free. If you understand and love the ecosystem, if whatsoever you have received, the value in dollars is not encouraging, hodl, and then you should do your due diligence as well in understanding the kind of airdrops you want to get involved with. But above all, understand that you want to be part of the ecosystem, and that is why you're receiving such airdrops for free.
Right, and talking about this whole airdrop system, do you see this continuing, in the short term, or is going to just fizzle away like every other season that comes up, in the crypto industry?
Okay, airdrops have always been part of the game, and many persons, there are some persons who would see themselves as airdrops and bounty hunters. This tag have always existed, as long as I've been in the cryptocurrency space. But then airdrops always comes with trend. There are certain times that the trendy airdrops used to be if you're holding a particular asset and that asset wants to have a fork. Sometimes it's merely holding that asset and then the project is creating other assets in the ecosystem and then they airdrop it to you. So this used to come as a trend, and we have always made money through airdrops. This is it. But the thing is, the last bull market 2021, the major trend was DeFi airdrop. So the fact that you did a swap in a particular DEX, a decentralized exchange, and then the exchange decide, okay, they want to create a native token. At the end of the day, you may just see it's worth $1,000, $2,000, as the case may be. But then ICE and this other, I think ICE, then there were other airdrops that came. that came that actually turned more of this tapping. TapSwap and the rest, even though TapSwap have not gone public. There is this other crypto project that the name just left me. It was very, very popular. According to Nigerians, it cooked. So a lot of projects have realized that where you will always get persons to know about your project is always in building the Telegram.
I believe that was Notcoin,
app.
if I'm not mistaken. I think that was Notcoin.
Oh, yes, that was Notcoin.
Yeah.
That was Notcoin. Notcoin really went mainstream, and so it now drove the trend of crypto airdrops to being a Telegram mini app. So the thing is, yes, right now the trend is that major airdrops that, the value always tend to excite persons are being built on Telegram. And I think Notcoin should take advantage of this. Other than that, it may fizzle out. When I mean fizzle out, not airdrops. Airdrops is always part of the game in the cryptocurrency market, but we don't know if the next season, where exciting airdrops will be on the Telegram app. But right now, this seems to be the Telegram season.
Right, and it's quite interesting that you can, play most of these games on the Telegram app. It keeps a lot of people, on that app. But, looking at this week now, what are you seeing for the crypto market? Are you still seeing bullish sentiment for Bitcoin, or could we see some kind of headwind this week?
Okay, the market started on a bullish note, and this was more of a continuation of, last week, price surge. And this week, the structure still looks bullish, but there are two things I think we should watch out for. I think, first of all, 60K proved to be a very solid support. And this was because when rate cuts happened, a lot of buy orders got into that level and held very strong. So our local support became 60K. The next local support that is in place right now is 65K. And 65K needs to be tested and prove that it's strong. And I think there was a bounce that happened, around that particular zone. But I think that the most 65K get tested and prove to be strong, the stronger the surge we are going to get. But if you look at what is happening on the chart, I think the next level we should be testing should be 69K, 70, 71, 72. But around 71, 72K, there happen to be another major resistance there that we may have to test. So
right.
we may have to hit that resistance level and then get knocked down maybe to 65K again before maybe we'll have some massive breakout that will break out of the range zone.
Right. I'm sure traders now looking out for all those breakouts and all of those resistance and support zones to see, how Bitcoin fares. Well, thank you so much, Gilbert Jokpata. Always great having your perspective. Thank you.
Yeah, it's my pleasure.
All right, so that's the show today, and that's how most of the markets we track is looking. You can watch this again on our YouTube channel and also continue the conversation on X. I'm Ladi Williams from me and the team right here at Channels HQ. It's bye for now.